Nice to see you. Thank you for the brief introduction this year. A couple of quick comments. He's your son to chip off the old block. And for you tonight, this is a candid, it's billed as where do we go from here, an insider's perspective. I think we have to be very careful about titles like that in this day and age, in terms of an insider's perspective. So I really demur. I did not invent that title. I don't want the SEC or somebody else to come after me on this kind of issue. We're all very sensitive to the corporate governance kind of things that are going on. But I think for you, these remarks are informal, they're candid, we think they're objective. They're not all pleasant, they're not all negative. It's really I think our best assessment of where we are, where we're going, some of the pluses and minuses. You know, in the long run, Keynes said we're all dead. I don't have the attitude. In the long run, especially when you deal with the equity market, you can always be bullish. And if you wait long enough, stocks will come back and do better. And certainly we know that real estate, which is booming right now, if you wait long enough, real estate's always a good investment. For those of you who are in the nearer term in terms of what to do, where to invest, I'm going to present the backdrop of what's going on in the U.S. economy, what's going on in policy, some views on markets, and the valuations of the stock market, which may not make you rush to the nearest place to chunk your money into the most attractive looking investment. And so take these remarks in that context. It's fodder for thought, and you will, I'm sure, do the best thing with your money, particularly if it's here at Boston Private Bank. Where do we go from here? This last year was as turbulent as any in recent decades, with numerous wake-up calls and events relating to the U.S. and the global economies, to geopolitical events and issues, and financial markets. In the U.S. and global equity markets, particularly, there has been great volatility and turbulence, the biggest stock asset deflation since 1927 to 1930, 1937 to 1940. Nothing like it post-World War II. And what appears so far to be the third down year in a row, and we don't have too many examples of that, at least in the major indices. There are always good stocks, even in bad times, for you to make money in. But in terms of the indices, and that's what I'm talking about, the stock market indices here and around the world, this so far is a terrible year and suggests we will have the third down year in a row. I think in retrospect it's fair to say that we in this country did have a stock market bubble. It has burst, and we're going through the aftermath of that bursting. The economy and most high net worth families and most investors have done okay considering the severity of this bursting of the bubble. Now, 2.5 years ago, 3 years ago, I didn't say that we had a stock market bubble. I did say that we didn't have a stock market bubble, and I did say that I thought the pricing of the new technology, which is a real phenomenon, and an activity that many of you were involved in from the venture capital side, that the market was pricing that unrealistically, and that it looked like we had a stock market bubble in technology and telecommunications. As for the equity market itself, our organization, called the Bear Market, raised a flag about it in the end of 1999 in a risk sense, called the Bear Market. We're on record on that in June of 2000, and we have only been bullish in really on equities 2 quarters out of all that time since then. Much of the time it's been tactical. It's turned out to be a strategic view. And I can't tell you today that all things considered, including the economic prospects, including the geopolitical risks, which are a big deal, not just the war against terrorism, but the risks of what we're embarked on in terms of removing Saddam Hussein, and the prospect for profits. I couldn't tell you that we have another view yet in terms of the near to intermediate term on the equity market. Longer run, of course, there's only one view to have, and that is to be bullish on equities. Longer run, though, is out a bit beyond the normal 1 year or so horizon of a talk like this. Not to say that stocks are going way down. It is to say that our view is still that the returns will not be as good as you would like them from here, and that there are still a lot of risks out there for the equity side of the world.